I've had it. I'm done.
You're
I'm
done
ready
following
for
it.
Tariff-free zone. Yep, we need a tariff-free zone.
I mean,
I couldn't stay awake when I print that Trump's, presentation or whatever you want to call it. His speech.
I was like, I'm here for the tariffs and the rate language. There was no rate language, but there was a lot of tariff language. After Lutnick walked it back, when the market was crashing, I found the whole thing so confusing because, I've been worried about this crashing the consumer since November, and the market just didn't seem to care. And then all of a sudden it cares, and then the news changes every 5 minutes.
Yeah, I have no idea what's going to happen. I don't even think they've defined it well enough because I have a Canadian company. They don't even know how to react to it as far as, is it finished goods, components, all that. But I don't know if it's been spelled out in detail enough so companies know if it's in effect how to operate with it.
Well, the latest thing is they were talking about a carve out for autos on Canada and Mexico because that would be pretty catastrophic to auto prices.
Yep.
You just don't know. Like last time in the first administration, they carved out some things that would have been highly noticeable to consumers, like TVs, for example. That would have been expensive and noticeable. But yeah, we don't have much details. I don't envy the people trying to run a company right now.
No. Well, they make the big bucks, so they got to figure it out.
Exactly. You've got like some kind of cool bird behind you, Robert.
I do?
Yeah, it's like outside.
Yeah?
Yeah, I think it's like...
We have an iguana that was pooping out there,
or
but we got it away.
You had an iguana this morning?
Yeah, well, no. But the first week or two, he was pooping outside next to our pool, so we had to chase him away.
Well, as long as it's not an alligator, you're good.
Right. So, Bakesy, are you there?
I'm here.
All right. I just wanted to hear your voice.
I do what I can, man. I do what I can.
How you feeling there, young man? You feeling good? How you feeling?
I'm great. This is almost the 2-month anniversary, and I'm ready to rock and roll. I'm harassing / lobbying my doc to get back to normal.
All right, good job. Me too.
Yeah.
I'm starting to get back with all the crap I have going on.
Yeah, this is kind of the injured reserve team, although I did not have it as bad as you guys.
This getting old is getting on my nerves. It's my new country song. It's going to be a big hit.
Yeah. Sometimes it's also like aches and pains. Am I sick or is it just that I'm old now? that's my existential question.
Yeah.
Anyway, should we get started?
Rock and roll. Rock and roll.
Yeah, rock and roll. Okay. Today is Wednesday, March 5th, and this is Wall Street Beats, and I am Berta Marte, and I am here with Robert Marson and Kevin Baker, who are going to share their best ideas with you and go through some of the news in the morning as well. So I am going to kick it off by asking Robert what he's thinking about this morning.
Oh man, I don't know why that did it. Something popped up on my. Go ahead.
I'm cold calling you, Robert. What are you thinking about?
Calling me. Someone called me and it came up on, it took away my
on the computer. Yeah.
I didn't realize that WhatsApp does that, but I gotta put this to the kibosh. So we're talking about 2 ideas today, and one is Abercrombie, which I dipped my toe in the water, and it's fair to say my toe got cut off partially anyway. And the other one is a company called LSI. So let's start with the bad news is when Abercrombie hit 100, I had said if it hits 100, I'm going to buy a starter position. I actually did it via deep in the money options, and the stock's down about 22 points since I bought it from 100 and change to 80, low about 82, 81 right now, I think it is. And I'm trying to figure out what to do with today. The news just hit. So the company reported solid fourth quarter, a solid outlook for the year. They announced that they were going to buy back $400 million worth of stock this year, which is about, I think, close to 8 or 9% of the market cap. And they were going to do that for 3 years. So they're going to buy back 25 to 30% of the market cap. And they got it good for the year. So why is the stock getting clobbered? Well, it's getting clobbered because we don't know how much leverage or deleverage is in the operating margins, and we think we know what operating margins should be, but the first quarter is no bueno for operating margins. So they have revenue growth, and yet mid-single digit revenue growth, and yet their operating margin is going to go from last year's 15% to 8% this year. So they're going to have a down, 40% quarter in earnings. So I don't think the street believes the year numbers, because the year numbers was sort of in line with revenues and earnings, is what the street estimates were before the company guided. So the first quarter is down, and yet sales are up. It's down materially in earnings. Now, they said last year's first quarter was an anomaly seasonally, that there normally is a sell-off or a drawdown in business as you go from the fourth quarter into the spring season. And I believe that. You look at historically, that's been the case. But the street does not like the first quarter outlook, and they didn't like the inventories, which were up 22%, and sales are up mid-single digits. So those two things, in my opinion, are weighing on the stock. That's made the stock compellingly cheap if you believe they're going to do 15% operating margins for this year, which they said they would do. They haven't done this before except for last year. It's a step function increase from where they were a couple of years ago. But if they make $11, the stock is 7 times earnings, 7.3 times earnings, which is absurdly stupid cheap. So I haven't figured out if I'm going to sell my less than 1% toe in the water long position, or whether I'm, even not making a real position, but try to get it doubled for a bounce, and then when I get even, get out. I haven't figured out if I'm going to do that. I know the chart looks horrible, Bakes, but I buy bad charts. And last year, in the summer and the spring, that was very lucrative, and today it's not so lucrative. So we're in a period where your applied optics goes from 10 to 45, and it's 17 now, and Ceragon goes from 2.5 to 5, and it's 2.5 again. So, thank God I sold all the stuff I sold in the last 2 months. I sold all those stocks that had doubled, and I trimmed them all 20, 25%. Should have sold more with hindsight to buy it back at these prices. But, at some point, the stocks become so cheap, you just have to say, screw it. I'm going to, make it a 2% position, which for me, a normal position is 5 or 6%. So if I say I'm buying something at 1%, I'm rooting that stock down, because if it doubles, I'm very annoyed with myself. So, I had bought a couple of 1%-ish positions in the last few months, and so far they were just indicative of bad news that was forthcoming. The market had figured that out. So, Verna, questions, comments?
Yeah, I mean, I'm struggling with this one too, because I have like a rounding error position higher than yours, like 25 basis points or something.
Right.
In January. And I thought about, I told you in the chat this morning, I thought about selling it last week, just because I'm trying to get rid of, 100%. Well, I mean, this has slight tiny international, but like, domestic consumer exposure where there isn't clear momentum and strengthening or, high growth in the business. And so this kind of fell into that. And then I'm like, oh, Robert's buying it. I'm probably an idiot to sell it here. So now I'm, stuck with the dilemma of what to do with it. I mean, what I'm struggling with is, you could take margins down to 12, 13% here and, make $8, $9 instead of $11. And you still have a 10 PE stock, not an expensive stock. And that, I feel pretty good. That's probably where margins would be on the downside. But I'm not sure if that happens, that you just don't go to 7 times, whatever the lower number is. I'm not sure that, what, is what's being priced in here now, the fact that, earnings are really going to be lower and it's a 9 or 10 PE on what people think. I'm not sure, because like I've had some other retailers that, like Academy, Crocs, that have, puttered around at like a 7, 8 PE for a long time,
Right.
they can stay there a long time
Right.
without.
You don't have to get paid from 7 or 8. They could stay there for a couple of years like Crocs.
Yeah.
That's a good
And
example of what could happen.
yeah, Academy is another one that
Right.
had that actually, like this, had a giant run. In their case, it wasn't a turnaround; it was out of an IPO where it went from, like, I forgot the exact number, called like $10, $12 to like $60, $70, pulled back to the 45 to 55 range in a 7 PE, and has been stuck there for a year.
Right.
I think the larger issue that I'm contending with here that would argue to selling is this sort of, what kind of consumer stock can work, and this is within a macro frame. If you are in the macro frame that we will either see a recession or a consumer slowdown, triggered by tariffs, persistently high rates, name your list of things that could be affecting the consumer. If you think this is going to be a worse year for the consumer than the last couple of years, then in my experience, the only things that are going to work, regardless of valuation, on an absolute basis, are things that beat earnings, things that are share taking, therefore can, have a bigger piece of the pie, and that, aren't crazily valued. I mean, even, that, I wouldn't be, I mean, maybe if you keep on beating earnings, you can live with a 50 PE. I'm not sure, like the Anons of the world, but certainly a GARPy stock that is taking share and beating earnings, or, growing sales, can still work in a bad consumer environment. I'm not, but, these deep value stocks, if they're decelerating, and earnings are going down, at best they're going, if you were a relative manager and you were in a mutual fund where you were trying to beat the index, they, at a certain valuation might protect you a little bit on a relative basis. But if you're an absolute market investor like you and I are, I'm not sure that a stock like this can go up if numbers come down in a bad environment, regardless of valuation. Maybe if it was 4 PE, it would be different, but 7, maybe not low enough. I don't know.
Yeah.
This is what I'm struggling with.
Seven hasn't been low enough to guarantee you're paid in consumer stocks when the market doesn't know for sure that the earnings were sustainable. And this is their first quarter where they had a very large miss, and they had a miss despite strong, despite in line versus budget revenue growth. So they said it's promotion to get rid of, winter cold weather product, and it's incremental costs for transportation, air freights, and other stuff. They had a lot of reasons, and they said they're marketing, to grow the business. So when things were good, they goosed their marketing budget. Then things go from good to okay, decent, and the marketing budget stays up. So now I'm sure they didn't plan to have this outcome in earnings, this large a shrink in operating margin, with year-on-year earnings declines of so large, with year-on-year revenue growth in mid-single digits. So
yeah, and you got to put it in the context of everything else that we've heard. We recently heard, tough numbers out of Target. We had a rough quarter out of Foot Locker this morning. I'm struggling to think of companies that really, Walmart was weaker. I'm struggling to think of companies that have had upside on the consumer side, this
Right.
quarter. On Running was one, Tapestry was another, but these are companies that I said, fall into that share taking category.
Not many are buying back close to 30% of their stock in the next 3 years if they go ahead and do it.
True, but I mean, like it's very Crocs-like,
Yeah,
but
that's true.
longer into it, because it's been, this is sort of a mall specialty retailer sort of leader in terms of margins right now. And as I've talked about before, Crocs is the highest margin public shoe company in the market. And it's the same questions at a conference in 2025 as it was in 2022. Can you sustain your margins? And 3 years later, they're still sustaining their margins, and when how long do they have to do it before it becomes believable? And so
Basically,
and
is
things
there?
move faster in fast in sort of mall fashion, just because
Right.
I don't think they've actually screwed up on design apparel. We'll see whether or not this was an inventory blip or not, but they've been doing everything right, and the margins are coming down. So God forbid they have purple shirts when they should have blue shirts.
Well,
An oversimplification, but you know what I mean.
The forecast for the year is flat operating margins. It's only the first quarter that's down. Banksy, does the chart? Is there any way to try to figure out where the bottom is? Because this went straight up from 30 to 200.
I don't want to be this guy, but I have to be. I put this out as a sell. I mean,
Yes.
I've been on this for a while. I've had Jeff Mackey, tell me that it's an absolute, behemoth, and it's a sell. And all I do is read the chart and put my sell discipline in place. These arrows are a sell of a third at 137, a sell at 141, and a sell at 114, and that's well north of $82. And I just there's something about I don't know. Just being as dispassionate as I can, but I have a timestamp of this someplace where ANF is a sell, and
I agree with you.
But
I'm
the
not.
question is,
I'm
what
not
about
asking
now?
you
Where does it stop?
Did you sell it before? I'm asking you from the charts. Can you look for a logical bottom? That was my question.
All right, here we go. Now, this is the problem with these big run-ups. You really look at this run here from
It's so big.
for basically 50 to
200.
There's no really good support. You know what I mean? The base is probably here at 60. This is like the next reasonable stopping point, because you see this. There's no staircase. It's just an escalator going up, and so there's no one there to catch it. And now everybody's lost money, and so most people have lost money, and they're saying, okay, get me out of this and give me something else to do. The 80 is a decent stopping point. I mean, you go down 15% in a day. But I said this on the call the other day. If earnings don't make stocks go up, what will? And so I say, this is in the penalty box for at least 3 months, and wake me up when September ends.
All right. It's very hard to find a bottom in that chart because it went straight up, and that's what happens.
Yep.
But that's a concept that I play called profit-taking panics. And once the chart looks bad, when you have the fundamentals, the outlook the company gave for the calendar year, 2025, the fiscal year 26, I guess, right? Because it's a February year, is still in line with where the street estimates were. They did not disappoint for the year. Where they disappointed was in the first quarter. So, and it's a compellingly cheap stock, and that's what I do for a living. And I don't mind having an 80 basis point position go to 60 basis points, and I decide to sell it because I do that all the time. When I buy a starter position, that's to keep me interested in it and follow it and have skin in the game. So if it fits what I like to do, logically, my buy formula, my sell formula would kick in right here today at the open and sell the stock. And take, because I used options, I think I took about a 15% hit in the stock from a sub 1% position. That, to me, that's nothing. That's a flat trade, even though it's 15 points.
Right.
100.
You get that if you have 5% positions, you get that on a 3% move every day. It's like
Right.
relative.
Exactly. So anyway, I was, I was just testing the waters to see if it would hold 100, and the numbers, gave people a reason to sell in a stock that has no support till 60, like you said.
So, did you have another name you wanted to talk about today?
I could spend 3 minutes on another stock. It's not an action. It's a stock that in the summer you could find it on Wall Street Beats if you're a subscriber, called LSI Industries. I put it on my stock list at 15, and I said I would buy it at 12. and the stock hit 25 a few months ago, and today it's going down to 17. So I'm putting it on my stock list and buying it at 15. It's a company that makes, it's LYTS is the ticker, LSI Industries, and they have a really neat domestic and manufacturing business. They make a lot of products that go into retail kind of outlets. So food service, quick service restaurants, convenience stores. They're getting into banks. So they make the lighting and the fixtures and the soda machines and the deli counters and the refrigerated counters for Wawa and ExxonMobil and companies like that. So they do everything in these vertical niches, from designing and gaining approvals to installation and having all the parts. So they put themselves in a place where, because they have almost everything, they can offer a McDonald's, not the bricks and sticks, but the lighting, the canopy lighting, if they have a canopy for a gas station, those kinds of things. The electronic price boards, the digital pricing boards, all that neat little stuff, the specific stainless steel countertops, and for frying equipment, and refrigeration equipment for these kinds of places, that they think they could roll up these niche businesses and get from 500 million in sales last year to 800 million in 3 years. And they'll make $2 at that point. And if they grow that much organically, plus with bolt-ons, it's a very fragmented business. There's still a lot of $50 and $100 million companies that they could buy to get from 500 to 800 million. And if they're making $2 in 3 years, that's a $30 to $35 stock from 17 today. So it's probably a good buy in here. It's pulled back from 25. Almost every small cap stock is down 20 or 30 or 40% from their highs. So this hasn't had any misses, but it's thin and they're sellers, so it's getting cheap at 15. I'll probably do more than a starter position. I'll probably make it a regular position if I can get it down to 15. Mm. What do you think of the chart, Casey? Can I get it at 15 from 17?
Number one, you had me at Wawa. I think that Wawa is a national treasure, and the poor folks outside of Pennsylvania don't know what they're missing. And right. Sheet stinks. So sorry, Pittsburgh, but Philly's got you beat. I love Wawa. I'm a big fan.
Also love Wawa. Central and Southern Jersey too.
Do you? Okay, I didn't know they expanded there. Well, God bless you.
College. It was the place of choice.
We lights. I used to own this back in probably the 90s, which is sad. But it's a great. I'm with you. It's a great business. Quirky. Just they grind it out. They have these mom and pops that they pick up at good prices and give them their currency. And we're just sitting here at a support level. On relatively low volume. I'm fanatical about this, but I pay attention. If a stock comes in on low volume, to me, that's a buy. When it comes in and people are saying, wait a minute, I've got new information and I really want to sell this because something bad has happened, then I get concerned. This is just a low volume pullback. I like it here. This is a level that goes back to 2 years, so I think it's pretty meaningful. I like it. I'm a fan.
I screwed up the trade. I owned it. I owned it at 6 to 8. I sold it at 12 to 14 and watched it go to 25. So I'm trying to get back in because the story is just as good, if not better, than when I sold it last year. Took about 100% profit out of it in a year. So I'm not complaining, but I do want to get back in, and I love the niche nature of the business. There's no Chinese competition. It's 80% domestic with their supply chain. There's no tariff issues, So they're the 800-pound gorilla in their niche. even though they're still only a $600 million business. But and management is excellent for a small company. The CEO and the CFO are phenomenal in my opinion. You don't see a super high quality management in $500 million companies in my opinion, but these guys are that good. So I'm just looking for an excuse. I would hope I can get $1 or $2 cheaper. But you like it here. Maybe I should buy my starter position at 17 and root it down. Just to have something.
Yeah, I'm looking at this level back here. I'm squinting here. Yeah, anything around 16, within a buck of 16, 18, which is where we are basically.
Right.
Yes, but you see this, Robert. You see the volume. It goes up on earnings, and then it recedes on lighter volume. That's just standard operating procedure. That's a staircase being built. I like it.
All right. Thank you.
And having you say nice things about management, that's like, manhole covers being thrown. So I like it, good.
So Bakes, what else do you have for us today in your?
All right, and I want to give you some flowers on your pizza pick. So I want to tease people a little bit because I think that's awesome. All right, here's what I have, and I put this in the notes. I'm going to switch up the order a little bit. Okay, this is Germany Fund. All right, and I haven't. I go through literally members and potential members. I go through 4,500 now, 4,500 ETFs every single month, one by one. Takes me about a day, maybe two, depending on how I feel. And this is the mantra has been Europe's sleepy, they're moribund, they're unionized, whatever. And I'm sure I'm going to anger some people, so send those cards and letters to Berna. But the Germany's perking up, and I don't know if it's maybe they have to spend money on their own defense. Finally, I don't know what it is, but Germany and Europe are perking up. The European defense stocks, Rolls-Royce is screaming, and that's kind of logical because they're basically saying, hey, we have to spend money on our own defense. But Germany, and I haven't really gone into this yet, the individual components, but this is a Luis Yamada, the longer the base, the higher in space. And if it takes out this 965 level, here we are at 947. I mean, this is, and so you see this volume picking up. So Germany is turning itself around for the first time in 4 years. So I'm intrigued by this. I'm intrigued by Europe. I have not pulled the trigger. Please stay tuned here. And when I do buy something with my own money, I will let you know. I have not done this yet. I literally found this a couple of days ago. But I am intrigued by Germany turning around. You see, and look at this.
Let me throw something in here before you move to the next
Fire away.
Right at the top of my screen, I have the Fez, which is the S&P, the Spider Top 50 Europe. And it's just popping out to me that it's up almost 18% year to date. We have down US indexes. That index is the top 50 stocks across Europe. It's dominated unsurprisingly, by German and French names in the first half. Your everyday names like SAP, LVMH, Siemens, Total, and Deutsche Telekom. But I'm not a technician, but clearly that's had a very strong start to the year as well. And so the mega caps in Europe are definitely leading the markets in Europe right now.
And this is why I like the perspective, because I'm this ETF, which again I literally just found this a couple days ago, but I like to let people know, what's percolating, and then I'll come back and say, listen, this is a buy for these reasons. Look at this perspective. I mean, this is down from in the 20s and has been chloroformed money for 3-4 years. And if this starts to turn into something at above 10, then you've got relatively weak hands over here where it can run up to that 20 level fairly readily. So again, I have not pulled the trigger. And I also, I'm struck by I've heard a couple of podcast people saying, well, I'm going to sell my tech and I'm going to buy, European value. And most people just, scoff and say, what are you doing? It's, they're sleepy, whatever. And maybe then it might just be, valuation. It might be fund flows.
Are lower in Europe, 100% lower.
Pardon me?
The valuations are lower in Europe, and they have been for a long time because the indices have been, it's a lot like small cap versus large cap in the US. Like there's just been multi-year underperformance, and usually you see swings where it goes back, but we just have not had that. And with the exception of like a few names which have been champions, like Novo in Denmark or something, there's just been years and years of underperformance on a macro level.
Yeah, and go to our member chat, because I've got some things that I read in The Economist and Barron's and elsewhere that sort of buttress this argument. But I'm always intrigued where something that my intuition is I'm going to ignore it, but then the chart tells me some positive change is going on, and I want to pay attention to it. So stay tuned, please. I got a couple more things. You got time?
A couple more? Yeah, you got a couple more, right?
I want you to finish with your winner. This is NVIDIA, folks, and I know but this is A&F. I talked about this. I talked about it on earnings eve and post earnings, and this thing is breaking down. And if you see this below this 111, 113 level on a close, especially, then you're going to 90 to 100, and that's going to leave a mark. This is still big in the S&P. It's big in most people's portfolios. It's certainly big in almost every ETF that's out there that's hugging an index. And the song is over. It's all behind me. Pete Townsend wouldn't give me the rights to the music, but I'm telling you, NVIDIA is over, and you heard it here first. And we're one of the few places that tell you how to sell stocks, and this is a big name that people genuflected to, and I think its best days are behind it. I could be wrong; it could reverse higher, but that isn't the way to bet, in my opinion.
I would just add here, I am not an NVIDIA expert, but I'm sure there's somebody listening to this somewhere who has insane gains in NVIDIA, is a true believer. Maybe they owned Apple for 10 or 15 years and they're like, oh, people told me to sell that along the way too. But, I would just point out that you don't have to sell all of something. If you are, if you have big gains in NVIDIA, maybe you don't want to pay taxes. Maybe you're a long-term believer in this being the winner in AI. Fine. Take some money off the table, based on what Banks is telling you. And then if he's right and it goes lower, you can buy back the shares that you sold lower. But it's not an all or nothing for those, because I've had this conversation with people about Apple before, and sometimes it's hard if you've had a giant winner, but I think that Dorsey is, everyone's like buy or hold. There's also sell half or sell a third or something, and just acknowledge the chart.
The great point. Thank you. And that's why, when I studied all the sells of the past, because I got my head handed to me and I didn't want to make the same, have the same dog bite me twice. I sell a third right here on this news right here, which is DeepSeek. I understand that, but it's sell a third, and then my other sell disciplines will kick in later. And so by the way, if you sell it, in February this tax year, you pay the tax April 15th of next year. So sell a third and stay tuned here, because I'll let you know when the other 2/3 kick in. I think those other 2/3 are going to kick in. I don't. Jensen can say all day long, well, DeepSeek's a positive. It can't be. It just can't be, in my opinion. But we'll find out.
I agree with you.
Right?
So Banksy, this is a stock that went straight up and doesn't have the stair-step function with support either when you look at the longer chart, right?
Here's the longer term, and that's why I say, 90 to 100 is where it's going to stop. right here. This is a decent step.
But then if it violates that, look at the next one
Next
down.
one,
It's a lot
the
lower.
next one's a lot lower. Yeah.
Well, and that, and that's why I'm pretty serious about this, because and you all know this. Both of you know this, but maybe our members don't, is that the way the portfolio management game works, when you're not just managing your own money, you're managing somebody else's. You've got to go to, I keep going to the Philadelphia pipe fitters, and you got to say, well, wait a minute, you were late to this game, you bought it at 70, and then you wrote it back down to 50. What are you talking about? And NVIDIA is such a high profile name. That's the kind of conversations you have. And I simply say, at least you say, I sold a third on the DeepSeek announcement because I didn't think that was, there's no way I could turn that into a positive. And then you could say, here's the reason I sold the second third and the last of it. And hopefully it's going to be somewhere around 90 to 100, and you're not going to write it back down to 50. That's my, the way I think.
All right.
You want more?
You had one more, right?
I've got one more, and I wish Ben was here because this makes his hair stand on fire. My esteemed colleague from Wisconsin, Ben Bry, Tesla, and this is like kryptonite for a lot of people. The reason I bring it up, this is the first time in a long time it closed below the 200-day moving average. And, people either, love or hate Musk. I really don't care. I'm in this for the money. But this is the election day, okay? And we've completely retraced all of this. And people move in groups. And here we are at 271, all right? And you take this out, boys and girls, children of all ages, that's going to be a problem. That's going to leave a mark. And there's been a lot of roadkill trying to short Tesla, but my point is the chart is telling me this is at least sell a third, at least, and get ready for bounces to $3 bills, give or take, and then get ready to really shoot it. So, everybody that was there for the quote unquote Trump trade, they're losing money, and they're going to get angrier by every point it spends below 271, in my opinion, and then you start going down to $2 bills right around here. So that's going to leave a mark, in my opinion.
Got it. So I'll just mention two things real quick before we sign off. One, no news on it, but the Chinese pizza stock is definitely continues to be the little engine that could. It's up another 6%, today, and no news. Just that Macquarie report last week, but just keeps on going. A lot of momentum. I'm not doing anything with it. I wish I had gotten to a full position. I kind of inched in because I was buying a 52-week high, which, as everyone who knows me knows, I hate doing that. But, it just keeps on making new ones. This is a great multi-year story. I'm thinking about this as buying Chipotle like 18 months after its IPO. I think it's that simple. Lots of stores. They're going to be profitable. And I'm okay with, I feel like there's, good Western babysitters to make sure that I'm not getting ripped off in China. It's pretty easy story. The other thing I'll point out is that Flutter reported last night. That's the parent of FanDuel and the big European gaming operator. They murdered their fourth quarter number. They came in at 294 versus street estimates of 196. How's that for a beat in a consumer sensitive stock? Pretty amazing. They're continuing their accelerated share repurchase program. I would have loved to see them do it a year ago, but I still am glad to see them do it here now. The guidance was like, it was for a lot of growth, double-digit growth, but it was like on the margin. The midpoints were, maybe 2 or 3% below where the consensus was. So conservative forward guidance. These guys are conservative guiders. So the stock, the massive beat is kind of offset by the not blow out guidance, although very strong growth guidance, fine with me. I mean, we're sort of hitting this major inflection point in the US on FanDuel where, years of investment are starting to turn into massive margin upside and leverage, which is exactly what they've been telling us would happen for the last, 3-4 years. And it's happening. And, this to me, again, just it's a secular one. I mean, I'm a little worried about the sort of the consumer outlook, although when I look at this business in Europe and places like the UK where you have a much longer history, the market's made up of two different segments. There's the VIPs who are truly rich, and people who bet $50,000 on a game always have money, and then it's made up of the masses who are doing micro kind of bets, $20, $50. And does that pull back? Maybe it does. But historically, these businesses have been, pretty recession sensitive, and there's something secular going on here. So, I think it remains a good one.
I get two things. First of all, I give you your flowers. No one. I listened to everybody. No one was talking about Domino's DPC dash China Domino's. No, and frankly, when a stock goes up on no news, I kind of like that. That means it's just people that have done their work and they say, listen, I'm going to start getting the buy orders in and build my real position. I think it's awesome. I love it.
I want this publicly since the IPO, and I wouldn't know about it if it wasn't for him. So John Solitis, who's an independent analyst who I used to work with, has been on the story from the beginning. So, I would like to acknowledge people when they're really ahead of the game. And so let's give him props for being on this since the IPO. So anyway, just want to throw that out there.
No, I love it. It's a team sport, and I think that's great. And Flutter, I don't know. This isn't the Super Bowl quarter, right? The Super Bowl quarter is going to be coming up in April, May, correct?
Correct.
And apparently, the casinos, at least the sports books, cleaned up as Robert Marson's Eagles obliterated the godless Kansas City Chiefs, and that's very tongue in cheek. But so, if anything, 100%. You've got a good quarter. I think you've got a good quarter coming up. I don't know how you could parse out how much the Super Bowl is per earnings or what have you, but even this is again a low volume pullback into support, and I think you've got the Super Bowl quarter coming up that people have forgotten about. They get this news in April and May, and if they don't blow the numbers out, I'll fall off my chair.
Yeah, it was a good Super Bowl. What's interesting is the fourth quarter had a terrible run. I guess it was early October. I forgot, like week 6, 7, something of the NFL, where it was terrible for the sports books, and all these companies kind of sort of warned, not like an official like number around the warning, but they were signaling that it could be a tough Q4. But both DraftKings and FanDuel and I think MGM Bet all came out okay. They sort of made it up in the back half of the quarter.
Point. So, are we finished on this or not?
Yeah, I think we've gone way over time, so I'm going to end this here. I'm going to thank everyone for joining us. Listen, if you want to go back and hear any of this again, get the transcript, look for some written reports, please check us out at wallstreetbeats.com. And thanks for joining. I'm Berna Barchet. We'll be back tomorrow with more ideas.
Thank you.
Thanks, folks. Thanks.